This weekend will literally tell us what's going to happen to the market over the next few weeks. Because right now, as you can see, we are testing the low from June. We have not broken or even tested this level since the last time we came down here, which we can see right here. But we have a few leading indicators. The S&P, the SPY, you can already see it is broken below those levels, and you're coming down to our key range, which we mentioned last week and this week to be watching out for. This level has already been broken, the 362 range, and you're showing increased weakness. We need to talk about why this weekend will dictate the movement of the market with some of the critical news that was announced today. But before we get into that, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm making content for you, breaking down the market so you are prepared to trade every single day with a few tips and tricks in between as well, unbiased as always. I always show you guys my positions, which I will show you again today as well. So as we jump in here, I want to just start talking about what's happening here. And before we get into really the charting, I want to cover the news. And I'm doing this during Power Hour. I have to have some stuff going on with my family. But as we get in here, I want to talk about a few things with the Fed and then going into kind of geopolitical news. Number one, the Fed. Vice Chair Brainerd warning against retreating from inflation fight prematurely. What they're talking about is slowing down the rate hikes too soon before inflation actually gets affected, which you could argue that they have done this in the past, and that's why we've seen no benefits from raising these rates already, even doing some very aggressive hikes that we've seen this year alone. This was a very big point to be made, and now finally the Fed is all agreeing on this statement, which in my opinion is showing you why we are dipping on the day. We saw the Fed gather around and definitely hammer home this thesis. Next, you have what's happening in Ukraine. Now, I know people want to believe that Ukraine doesn't matter. It's this, it's that. Look, I'm just here to tell you what's going on and how I am kind of taking this, how I'm processing this, and how I'm trading based on this. Do your own DD. Always do your own financial due diligence and never trust just what I'm saying here. You need to be doing the research for yourself, because guess who's responsible for your portfolio? You. Got to go look in the mirror. So we need to talk about what's happening here. If you don't know, if you haven't been updated, haven't been paying attention, and I've kind of kept the Russia stuff on the back burner, but Putin has officially basically annexed 4 parts or 4 territories in Ukraine, saying that they are now Russia territory. And if you don't really know what's happening here, he's basically going to justify using nuclear power, nuclear weapons, if those areas are attacked by Ukraine, because now those are quote unquote sovereign areas, a part of Russia. Now, again, we can all understand that this is absolute craziness, that this is just the actions of a dictator or a crazy person. Now, I don't want to get down that train, but if any type of weapon like that is ever used, it will become an American problem and it will become a European problem. So you need to have this on your radar. You need to be paying attention to this, because this is really big. And we've seen tensions rise on the day. We've seen Biden make comments about this. We've seen the European Union making comments about this. So there's a lot of stuff happening here. And then also Ukraine filed to join NATO today as well. Again, things that are happening. Broad scale, we need to be paying attention. If you want updates like this on news, I recommend following my Twitter. I do post some charts there as well, so you can see. And then this is the last thing as well. I almost forgot. The Fed announced today, the Atlanta Fed, I want to highlight this. They came out. So our GDP projection for quarter number 3 to end was 0.3, and they raised it to 2.4. Growth. So they're saying that we're going to grow that much. That's their projection. Absolute stupidity. I honestly can't believe an individual was allowed to put this out there. It's just downright out pure manipulation. And this leads me to the next factor that could really be detrimental for our economy, is that now I believe the Fed is putting themselves in a situation to be not trusted and not relied upon by us, the American citizens. And they are doing this to themselves by making really stupid comments like this. I believe this is along the right way. They need to be aggressive with these rates. They have to be, even if it causes pain, no matter what people think. But this is just sheer stupidity. I cannot believe they expect us to get to 2.4% growth, and they're going to come out and adjust these probably next week, lowering them. So just know that, and when these get lowered, it's probably going to affect the market negatively. Once again, even right now, you're seeing us break below 359 as I'm speaking in this video. Now, again, I can do charting on this, but I've covered a lot of this on my previous videos. I want to just talk about why I'm liking these areas and what I'm looking for. Specifically with SPY, then I want to cover a few other areas. This right here is going to be an area where you're going to struggle to see massive drops. And that's what we're seeing right now. We're slowly just kind of dripping down to this area on the stock market, specifically on the SPY. You touch 359, you'll probably come down to 357, 358, and slowly bounce in this range as well. You start to get below this range, I think that's when we could see a free fall down to 350. Going over to NQ. This is really the scary chart, if you will, because if you come back in here, you have a little bit of support here where your low is right now. If you break below this range here, your next line is about 10.7. But if you break below 10.7 on Nasdaq, there is no liquidity that will help you. I think you will almost drop straight down to 10,000 flat, which could be absolutely detrimental for all tech stocks, specifically a lot of the big names that you may be holding, and myself included. So I'm taking this pretty defensively as we speak. Now, there's one sector or one kind of index that I'm watching right now that has my interest on a trading opportunity. IWM. IWM is probably the best trading opportunity. A lot of guys in Discord were talking about today, and honestly, it sparked my interest. So if we look at IWM about the 15-minute chart, in my opinion, once again, you can see that you're trying to make these higher lows here. You're attempting to. You're trying to bounce, but if this breaks, which most likely if NQ and the ES break, the S&P 500 and the Qs, then you should expect more downside on IWM. The small, basically the Russell 5000, Russell 2000, whatever is going on here, you should expect more downside on the market. I know I'm going to get roasted in the comments for not knowing the Russell, but it doesn't matter because looking at the chart, in my opinion, if this breaks, I'm anticipating some nasty slippage and nasty downside. Coming all the way back out here too on the daily, recognize where you're at. Basically, this range has held for some time, and this is a really big range, but you have to highlight it. It's basically your previous highs that you were establishing, right? So you can actually see before you get the big breakout, this was your levels. If you break below this 160 area, I have to anticipate you'll see a big drop to 150, maybe even 145. That is an area that I'm looking at, and I'm like, I like the volatility, the risk to reward here. It's definitely sparking my interest on these ETFs as well. So looking at these, obviously extremely bearish from my point of view, and I will continue to basically have that sentiment. Next up, looking at the order flow on options and going into Bookmap. SPY, I want to start here. A lot of large orders coming in here. A lot of large orders. Probably one of the worst days we've seen. They are setting up for a very big orders, block orders. So these big block orders, majority of the time are set up from hedge funds and are doing direct orders. They're buying them in the money because they are most likely going to allow them to actually expire and take the money off the top from there. If not, just take them a little bit earlier as well. But usually these are the only people on the market on these. You can see ordering lots of money for their positions right here, specifically going into Qs. And I want to highlight here that the dates we're seeing them. We've been talking about October 21st. People were saying, well, October 21st, this and that. But now you're seeing them roll over. Look, now they're going to December. Now they're going to January. Now they're going to November. It's the end of the quarter. They're repositioning themselves for further dated out, showing the overall sentiment is bearish over the next 3 to 4 months. Okay. Qs. Next up, let's talk about this. As we get in here, we're seeing a lot of the same, and really this all started with Qs from a few days ago, but all these orders are coming in right now as we speak around 3:30. That's going to be Eastern time. Right now it's 2:30. So these are all coming in right now as I'm making this video, and I could anticipate more by the end of the day. Again, going over to VIX, we talked about this as well. It's consolidating over 30. Very bullish, very bullish. Your put to call ratio is almost flat, but I want to highlight the biggest orders are still to the call side, right? Next up, I want to talk about SPX. Last thing. This is pretty split. A lot of these big orders came around lunchtime. You got a little bit of a bounce, but guess what happened? As we go back into this chart, you saw a lot of blood. So when we come back in to SPX, SPY, whatever you want to talk about, ES. Let's look at ES real quick, just to give you a better visual on the 5-minute. Look at what's happened. You got a really nice bounce today, and then boom, shot right back down. That's what I'm saying. You're getting these extended moves to the upside, and then they're shot right back down by the bears, indicating, in my opinion, that bears are more dominant in this market and showing up a lot more than the bulls are, right? When bears step up, you're seeing more volume, you're seeing more movement, you're seeing more volatility. That's what you want to see in whatever favor of whatever side of the market you're on. That's unbiased, okay? That's what I'm looking at there. When we look at the big six, the biggest stocks in the market, Apple, Microsoft, Nvidia, Google, Amazon, Tesla, these are our favorite ones. Some of the big tech movers, some of the best money makers. We can already see they are just going down, 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 and they're about to get back to those lows you had back in June. Once this happens and you break, that's when we really know danger is here on the market. What happened back here? You broke below this level and we saw immediate downside on all these straight down to 965. We saw pure blood on the market. Another thing I want to mention is, in my opinion, we have not seen the major downside on the market that we want to see, right? We haven't had one of these really big red days basically in 3 weeks, right? We haven't had one of these moments where you just go straight down for like a day and a half. You've been just inching down. And I believe if you break below this level, you are going to see intense downside on the market, specifically because of NQ withholding this key area. That's my opinion. Going into Bookmap, showing you what's happening here. This is one of the first days in a while. If you've been here, we've been showing you what's happening with CVD. Buyers versus sellers. Sellers showed up, not only with actual buying power, but the number of sellers. Today, sellers said, today is our day. The last day of the quarter, guess what? We are going ham. You actually saw some decent long orders established, but guess what? Sellers were dominating today. And when you come down, you can see there's an area of liquidity here on ES. But again, in my opinion, what I'm watching here is not ES. It's going to all be NQ. Before we go any further as well, I have to give a shout out. I actually almost forgot. Today is going to be the last day. So you know, Fall 15, the Discord is 15% off just for your first month. So you can test it out. People have asked for a discount. We did it for a week. It's going to be wraps after this. I might leave it up through the weekend. I'm talking right now to Jay. We're getting kind of capped out right now, but this will go on to the end of the week just so you guys know as well. So if you want to get in, first month, 15% off. I want to highlight though right now that looking where you're at, if you break below this, you get below 1107, you are looking terrible. Now, again, I want to talk about the trades that I'm in, what I'm looking at in the market, and kind of where I'm going right now. Right now, my favorite trade right now, I have Amazon. I told you about this yesterday. I actually got down on the position. I was actually down like 20% on the day. But guess what, boys? I didn't sell a dime. What did I do? I went and I bought more. I was getting more Amazon. I bought some at 280. People, they were like, look, you're going down, Tyler. What are you doing? I kept buying. I was a believer in my position. I had a plan. October 21st, I continue to buy more of this. I do believe you're going to get a test of 110, 109. But ultimately, if you break below 109, we're targeting the 102, 104 region down here as well. Again, IWM, I want to highlight some plays I like here. I like IWM 162. We saw some good volume, 160s as well. We saw volume flowing into those. Those are beautiful plays in my opinion. I like where they're going. I like how they're moving. Going in further, I want to talk about Tesla, one of the best plays in the market today. You continue to retest this 273, 272 area. Look at the levels here. Look at how you're breaking. You get a push up, rejected, retest, boom, down, down, down. And I believe more slippage is coming, 250-ish, most likely upon the horizon. We're seeing more and more downside. Again, I'm doing this live near the end of the day because I won't have time after. But look, you're already getting some of that breakdown. You have to anticipate some of this blood, especially with the geopolitical positions and overall climate going on right now. And again, what is the thesis behind the channel? Reduce risk at all cost. I'm going to tell you right now, I do believe entering puts down here is risky. I want to address that. I do believe it is risky. And I believe Amazon is probably my riskiest position I've had over the past 2 weeks, give or take. I think it's my riskiest position. However, I am not going to fight the trend. 2, I need to understand that I've made a significant amount of money over this past 2 weeks, so I can open myself up to maybe a little bit more risk. 3, the risk to reward here on Amazon is absolutely worth it for me because I believe if you get down to 109, 110, the position will double up. But then there's an also further effect if you still get more downside, which I believe you will. and you get the breakdown, this will come down to closer to 100. And if that happens, we're looking at a major winner. So I'm going to keep this on the board. I'm going to keep you guys updated with this trade specifically because I absolutely love it. And I try to keep you guys updated and actually teach y'all while we're doing this as well with some of these breakdowns. So if you have questions, please comment down below. I'll try to break them down as best as possible. But these are the plays that I'm really liking. And if I had to follow it up with anything else, some of the stuff that I would be telling you to look at, I love Netflix. You've got a retest of 240, more downside coming in here. But I really love some of these plays that are making new 52-week lows. Microsoft, I think 232. I've been talking about this for weeks. It's coming. Meta, you already hit 137, but I believe new lows. It's a bear pennant. More downside, most likely coming, at least retesting lows 134. I love everything that's happening right here, and I could not be more excited. Runner up, probably one of the best plays as well, as Jay Ream has been talking about AMD. I mentioned it yesterday. I believe this is still coming down to 60. Jay still believes it. We love what's happening here. We're extremely excited about this market. There's always plays out there, but I recommend, instead of rushing into all these plays, is that you develop a plan. You take maybe a few less trades, but set yourself up with a plan so you're controlling what you're risking. You got to make sure that you can allow yourself to lose. So when you do win, it's outweighing those losers, okay? Because you can never be afraid to take a position. You need to have faith and have a strong conviction in your plays every single time you enter a trade. And hopefully you got something out of this video. If you have any questions, again, comment down below. I'll see y'all next time.